Good afternoon. It's Jeffrey Christian of CPM Group. It's about 12:40 in the afternoon on Wednesday, the 13th of November. I'm doing this on Wednesday instead of Tuesday because I was traveling and I was taking some time off. You might see from my nose, I learned a valuable lesson on Monday, which was that when you're on top of a mountain on a rocky outcrop, and there's a 60-mile-an-hour wind, you don't jump over a gap between rocks because what happens is the 60-mile-an-hour wind is stronger than you, and you don't necessarily land where you want to land. That said, it's no big deal. It's 12:40. Price of gold is around $2,606.30. Silver is around $30.73. Platinum is $941.30, and palladium is $941.50. We've seen prices move sharply over the last few days. Gold, which was approaching and testing $2,800 an ounce at the end of October, has come off about $200. Frankly, it may have another 100 or more to go on a short-term correction. We see this as a short-term correction. Our expectation is still that the price will rise further over the next 3 to 5 months before we may reach a cyclical peak. A lot of it's going to have to do with the political and economic environment. And we've talked extensively about this already in the past. You basically have a relatively strong economic environment. There are pockets of weaknesses, and there are things that we are looking at that we think may mean that that there will be a recession next year, and it could be much more severe. The political environment, both in the United States and on a global basis, will have a lot to say about that, and it will also have a lot to say about the gold price. Our bottom line is that we can expect investors to continue to be extremely concerned about economic and political conditions, and that 2025 might actually see a more hostile economic environment than domestic. That would lead to greater investment demand and higher gold prices. It's pretty much there. We're hearing a lot of static, people expressing opinions and beliefs about what a new Trump administration and a unified Republican government could mean economically and politically and socially. We have a variety of thoughts. We think it's way too early to really make any definitive statements. Our expectation, we update our gold and silver and economic 10-year projections on a quarterly basis. We will be doing that over the next several weeks and taking into account not only the U.S. election, but also other important elections we've seen and political developments around the world over the course of the year. And we'll have a better view. But I think it's way too early to make any definitive prognostications. I will point out one trivial fact. In 1980, Ronald Reagan ran on a platform that included returning to a gold standard, which was actually it was a joke of a gold standard that they were proposing. It was a very mean joke. But in addition to that, they had a plank in their platform to close the Department of Education. This was something that the Republican Party had railed against for years, and he appointed Terrence Bell as Secretary of Education to shut it down. After 8 years of the Reagan administration, the Department of Education had doubled or more than doubled in budget. I think its budget had risen something like 14% per annum over the 8 years that Reagan was president. And it had built a new building down in downtown Washington. And it had slashed its services, the money that it actually provided to state and local authorities for educational purposes, about 14% per annum. So I don't take anything that was said or promised as likely to occur. I worry about some of the things. People are talking a lot about tariffs. I think it's way too early to talk about tariffs. I think in 2016 there was a lot about talk about tariffs and a bunch of other things that didn't actually transpire. It's just too early to tell. We think that over the next few weeks you'll get a little bit more clarity, but it's really going to be probably the next several quarters to really understand what's going to be going on. So, we're urging people to be cautious in how much they prognosticate about what a new era, another Trump administration, and a unified Republican Party means. CBO has said that he probably will add another $7 trillion to the national debt on top of the perhaps $5 or $6 trillion that the CBO baseline increase in the national debt over the next 4 years was already projecting. So that has important implications really across the economic spectrum. Silver prices have also come off. They had broken above $34. I had understood from what I saw on the internet that the next price was probably going to be $100 an ounce. Instead, it's come down. As I said, it's $30.73 today. We expect that there's some further weakness. You can see that even at $30, that's a high price, both by the standards of what's happened over the course of the last year and what's happened over the last 5 years. So silver prices are still pretty high. They do have the scope to come down. We don't necessarily see them falling too much further in this near term. $28, $29, are support levels. And then we do expect them to rise later in the years. We have been relatively negative on platinum and palladium, and maybe relative is not the right term. We've been negative on platinum and palladium. The price of platinum has tried to break over $1,050. It did spike up to $1,100 in the middle of the year when there were people who were concerned about Russian supplies being interrupted by political, either the Russians withholding metal or sanctions being applied against it. There have been no sanctions applied against platinum or palladium or rhodium because the auto industries outside of Russia desperately need that metal. They really don't want to have that happen. So even with the latest round of sanctions talk, those the PGMs have been excluded. I believe that the the Biden administration said something about palladium, but that's highly unlikely that it's going to happen. Platinum prices did test $1,050 at the end of October. They've come down, and as I said, they're around $941 today. And our expectation is that the price probably has some support around $900. As you can see, it has had $875, $900 earlier in the first half of this year. And $800 is a longer-term support that's held really since the price came off sharply in 2014, 2016, bounced off of $800. But we don't think we'll see $800, but $900 wouldn't be out of the question. And on the upside, we do think the upside's relatively limited because of fundamentals in the supply and demand of the metal. Palladium has gotten even worse. It rose much more sharply in late October based on the aforementioned rumors about halting Russian shipments. That clearly wasn't accurate, and the price came off. You can actually see that there were two periods in September and October of very sharp increases on of palladium prices on a short-term basis. Each time the spike up lasted about 4 or 5 days. A lot of people started talking about much higher prices, and after about 4 or 5 days of sharply higher prices, the short-term factors that were going on in the market dissipated and the price came off. Palladium then, this time, came off initially before the election But then with the sell-off of precious metals assets and copper, after the election, palladium fell even further, and it's 941. Our expectation is that the price of palladium in the near term probably continues to consolidate as it has for most of this year between, say, $800, $850 on the downside, and $1,050 on the upside, with spikes below and above that. That's really all I have today. We'll be back on Friday, and we may be talking about a variety of issues. There are a lot of topics to cover right now. As I said, we do think that it's a little bit too early to be confident in one's projections about what a new Trump administration will mean and a unified Republican government will mean. We also think it's way too early to see what the Biden administration might do in its waning days. Probably nothing. If it does do something dramatic, it probably will be in the foreign affairs area as opposed to economic or domestic policies. But we have to wait and see because there still are 3 months of a Biden presidency. And then you have to watch all of those actors outside of the United States and inside of the United States who will be making adjustments to their political, economic, financial, and business plans predicated on a changed economic and political environment in the United States. We'll be talking more about that and presenting that to our clients and on these videos in the weeks and months ahead. In the meantime, you can go to our website, cpmgroup.com. You can buy some of our research, our yearbooks, our shorter-term research, and you can send us an email at info@cpmgroup.com concerning ways that we can help you better manage your precious metals and commodities exposure. That's all I have for now. Take care of yourself. If you are climbing on top of a mountain and the wind is 60 miles an hour, remember, the wind's probably stronger than you are. And you may jump thinking that you're going to land someplace in particular, but the wind may have a different idea where you should land. So I guess that's a good metaphor for investing at this time in the world. Take care of yourself, take care of others, do something good for the world, and we'll talk to you on Friday.